Ladies and gentlemen, good morning and welcome to the Q2 and H1FY26 conference call hosted by PTC India Financial Services Limited. As a reminder, all participant lines will remain in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal the operator by pressing star, then 0 on your touch-tone telephone. Please note that this conference is being recorded. I will now hand the conference over to Ms. Priya Chaudhary from PTC India Financial Services Limited for opening remarks. Thank you, and over to you, Priya.
Thank you. Good morning, everyone. I'm Priya Chaudhary, Head Investor Relations at PTC India Financials. I would like to welcome all on today's call for a discussion on Q2 and H1 FY26 financial results of PFS. At the outset, we would like to reiterate our commitment to delivering consistent value to all our stakeholders, guided by the principle of transparency, accountability, and responsible growth. Our core focus continues to be on profitable expansion, operational excellence, and development of innovative and customer-centric solutions aligned with our long-term strategic vision. Now, having said this, the past quarter was marked by a steady progress in our key focus areas. Loan sanctions and disbursements were at 1,048 crores and 326 crores respectively. We continue to witness significant improvement in our asset quality. Our total gross stage 3 reduced by 75% in the past 1 year. Today, only one account constitutes 97% of our total gross stage 3 at 193 crores. The company's foray in SME segment and 100% of our disbursements in private corporate space are the other key highlights in this quarter. With the above backdrop, I would now like to introduce the top management team of PFS present in today's call. It's led by Mr. R. Balaji, MD and CEO, Mr. Dilip Srivastava, Director of Finance and CFO, and Mr. Sanjeev Kumar, Director of Operations. I will now like to hand over the call to our MD and CEO, Mr. R. Balaji, for his opening remarks and update on the company. Over to you, Balaji.
Thanks, Priya. Good morning all, and wishing all the participants a very happy Diwali. So I would just give a brief overview, and then subsequently Sanjeev would speak to you about the business performance, and Dilip would take you through our financial performance. First of all, I would like to lay on record what had happened in the last week of September. That would have been in the minds of many people. On September 26, 3 independent directors resigned. And what I would like to reiterate is the management. There was no issues with the management, and it was a surprise. Subsequently, the company moved fast and appointed Ms. Mini I, a former MD of LIC, as an independent director. We are taking steps to appoint 2 other independent directors in the next few weeks. Now, coming to the overall key highlights, by and large, this has been a positive quarter. The one key thing which I would like to highlight is that our sanctions for the quarter was at around 1,050 crores. Not only was this the highest sanction numbers in the last 10 quarters, but more importantly, the sanctions in this quarter was more than the total sanctions of the preceding 5 quarters. That shows that our business transformation plan is on track of lending, granular lending, stepping away from high-value disbursements, high-value projects, and moving to mid-size, which would be meeting our risk profile. So this is what we are doing. Second, the critical thing is what we had said earlier in terms of better quality portfolio. Now our gross NPS come down to 5% and the net is close to 1.5%. This despite the book having declined. The book was declining because of certain prepayments, but we are at the bottom of it because today our disbursements If you look into it compared to the regular repayments, the disbursements in this last quarter was more than 2x. And going forward we got a quite robust sanction pipeline, and going forward in quarter 3, Sanjeev will talk about it, we expect to go further. Another critical thing which we have done in this particular quarter is we have laid down an internal ESG roadmap, which will ensure that not only are we doing good business, but we are also doing business that is good for the planet as a whole. And progress on this over the next 2 or 3 years would enable us to also access overseas funds. With this, I hand it over to Sanjeev, who will give you an overview of the quarter 2's performance.
Thanks, Balaji. First of all, I would like to congratulate my team also and the investors. I like to say thanks to the investors and all stakeholders to stay with us during the time of our turnaround and turmoil. Along with that, I would like to share the progress what we have made and outline the direction, the way forward. See, I joined PFS at a juncture when the organization had already undertaken significant work to stabilize operations and resolve legacy issues. Building upon that foundation, our focus has been to drive growth and prudence and strategic clarity. We had earlier projected the disbursement of around 1,000 crore in Q2 FY26, but somehow we fell short of that, and we fell short of that with quite a margin. But that shortfall was not a cancelled disbursement. This is only deferred to the next quarter. In fact, better than expected or better than normal monsoon during the late August and in the month of September has resulted in a lower demand of power sector, as well as the construction space have been deferred to the next quarter. And that resulted in a manner that disbursement was not demanded by the customers in the period of August and September, which we planned earlier. So it will come now, and maybe in a month's time, we'll cover for that. So that's the issue what we faced in last quarter for disbursement plan. At the same time, our emphasis remains on building a strong and resilient pipelines. So sanctions, whatever we have done, is still there to be disbursed. Apart from that, we are planning to, or we are already poised to sanction more than 1,500 crore in this quarter, Q3. In fact, more than 1,000 crore documents have already been pipelined, and it's ready to be sanctioned in the next few meetings. Apart from that, the strong sanction pipeline being developed in Q2 and Q3 will serve as a firm foundation for our achievement in the next financial year also. Our strategy for the year is anchored in balance and sustainable growth, focusing on sound credit quality, operational efficiency, and customer-centric structuring solutions. We are consciously shaping a loan portfolio that is resilient, diversified, and forward-looking. The traction witnessed in Q2 is a clear indication that we are moving in the right direction. Another noteworthy development in Q2 was our foray in SME lending sector, which is where the strong pipeline under preparation is there. This initiative supports us on our objective to diversify beyond the energy sector and create a more granular and broad-based credit portfolio. The benefits of this diversification will be visible maybe from the next quarter onwards. Our big achievements are there on the asset quality front. Performance continues to be encouraging, and we have witnessed a significant improvement in past 1 year. The gross stage 3 reduced by nearly 75%, what Priya has already emphasized. Over the past year, from rupees 764 crore to now it's to about 193 crore. Net stage 3 were also down by 83% from 283 crore last Q2 25 to only 47 crore in this Q2. The Vento Power account was successfully resolved through a change in management with Enviro Infra Engineers with rupees 115.6 crore transaction fully concluded in Q2. We also had technical write-off of 138.60 crore of loans and equity both during Q2 FY26. Post these steps and measures, stage 3 NPA level have come down materially, leaving only one NPA, that is Dano Wind, for which resolution strategy are actively being considered and pursued. There were no new slippage in Q2. In fact, there was no new slippage in last few years. All loan accounts disbursed since FY18 continue to remain standards, reflecting the robustness of our credit appraisal and risk management practices. To sum up, FY26 is emerging as a year of caution, yet constructive growth is being planned and is being executed. The strong sanction momentum, diversification into SME, sharper private sector focus, and significant sustained improvement in asset quality collectively position us well to deliver long-term value to our stakeholders, while keeping the credit discipline at the core of all we do. This is the update on business side. Thanks a lot. I'd like to hand over the call to Dilip now, who will appraise about the financial performance.
Thank you, Mr. Sanjeev. Good morning to all the investors and stakeholders. Our Managing Director and Director of Operations has already explained the highlights of the quarter. So, important highlights, I would like to mention that during this quarter, our limited review report has been qualification free. And Q2 during this quarter, our revenue has been 132 crores with a PAT of 88 crores. Improved net worth of 2978 crores from the 2754 crores which was in the March 2025. And our cost of borrowing has also been reduced. It has been reduced to 9.49% from 9.67% which was in the quarter one. And there are a lot of support from the banks. Our treasury team has been taking up, and Canara Bank as well as Bank of India, they have reduced the spread as well. So other banks these discussions are also in the pipeline, and we are expecting further reduction in the rate of interest. And gross NPA, as already explained, that it has been reduced from 10.22% to 5.23%. And our net NPA have been reduced from 4.13% to 1.32%. So these are the financial highlights. And now, Priya, over to you.
We can now open the floor for the Q&A session, please.
Thank you. Ladies and gentlemen, we will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on their touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use their handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. We take the first question from the line of Sucrit D. Patil from Eyesight Fintrade Private Limited. Please go ahead.
Good morning to the entire team. I have two questions, one for Mr. Balaji. I have a forward-looking question. My question is, given the evolving infra financing landscape and the increasing role of NBFCs in bridging long-term capital gaps, how is PTC Financial positioning itself to stay differentiated from others, whether through product design, client selection, or any partnerships over the next 12 to 18 months? Yes, sir. Thank you.
Thanks. What we are doing is we are again reformulating our long-term strategy. The only thing what we would say is infrastructure is a very, very big area, and there are lots of projects from small to few tens of crores to few thousands of We are approaching the entire future using considering three dimensions. The first dimension is the relevance of our skill set. We, over the last 17 years, have built up a certain capability. How can we leverage it going forward? That's the one. Two, the attractiveness of that segment to us in terms of returns. This is important because we are a smaller financial institution compared to the other players who are behemoths in the space. Therefore, we have got a significantly higher cost of funds compared to them. Therefore, we need to find the niches which offer us the returns that we could do. Three, and more importantly, our ability to engineer and co-create a customer-centric solution so that we'll be able to not only acquire customers but hold on to them going forward. Typically, if you look at these segments, when we enter into, would be smaller in size, few thousands of crores, so that they would not be the focus of the large players. So while we co-create, we'll be able to build our skills and develop appropriate solutions. And as the segments grow, we'll also be able to grow with it. This is what we are doing. And we foresee it happening gradually. So to answer to the later part of your question in terms of 12, 18 months, etc., what we are doing is two things. One is intensification of what we have been doing in the past, but the focus would be on a smaller ticket size because today our book is around close to 4,000 crores, so we cannot take very large risks. So we'll be looking at projects of around 150 crores or so, and then build on capabilities in these newer segments, which will be in the 50, 75, 100 crore segments. Gradually we'll be getting into this. And this is which we think there is sufficient space for us. So the two areas, if you would want to put in, we could call it distributed infrastructure, which is infrastructure but which is not centralized, so therefore we'll be able to get lots of projects across the country on 100 crores, 150 crores, etc. And two, focus on sustainable finance, so that whatever we do is also good for the planet and the community, and therefore we'll be able to not only contribute to the society but also be able to source funds at a more competitive rate.
Great. Just my final question. Will we be seeing any partnerships down the line?
Like what I said, we are drawing our long-term strategy. Obviously, when we are able to, if you're getting into a smaller ticket sized loan, say 75 crores or 100 crores, two things become critical. One is the cost of acquisition, and secondly is the customer quality. So therefore, obviously, instead of doing it on a solo basis, if you're able to go with some other partners, it would actually help. But all these things are developing. We need to develop the strategy, and then subsequently, we might want some partners. For example, if you're getting into bioethanol space or equipment manufacturers, but they should also want us. So it needs to be a symbiotic relationship. So as and when something fructifies, we'll keep all of you informed.
I think that is a good enough guidance from you. And I wish the entire team best of luck for the next Q3. Thank you very much.
Thank you. We take the next question from the line of Nilesh Jetlani from BOI Mutual Fund. Please go ahead.
Hi, sir. Good morning, and thanks for the opportunity, and congratulations on the great set of numbers. So my first set of question was, so on the disbursement number for the quarter, can you just give color on what's the breakup or what's the segment bifurcation where disbursements have happened in H1 or maybe Q2?
Sanjeev will answer.
See, in the last quarter, we have been able to disburse a little more than 300 crores. And they are mainly in power sector only, and apart from, we have been able to disburse some corporate and construction loans also. So, the breakup, if you want account-wise, that we can give. But at the same time, I would like to say that we have disbursed in solar power, renewable sector like wind, and one of was there in this, we can say, NBFC area also, we have just started, and coal also. So it's a diversified portfolio, and we'll try to keep the things diversified as well as a granular level also. The ticket size would have been very low, maybe something around 150, say 50 to 100 crore type of breakup may be there. And in future also would be doing like that only. We have been falling back by something around say 600 crore out of from the plant, but that will also be disbursed in coming month. And the breakup would be like this only: solar, wind, some in thermal also, and mostly in NBFCs and in SME sectors.
Got it. So largely power and average ticket size is 50 to 100 crores. That's the understanding.
Yeah, that's what we are planning.
And any breakup on private versus public?
See, private versus public, our last quarter disbursement was 100% private. We are focusing on private sector for the return also, as well as for the sustainability of our lending also. That we have been explaining in last few minutes in the meetings altogether. And but we are not at the same time declining something about government sector. We are focusing on our core sector where we can get the margins what is expected by the shareholders, and the longevity of the lending also, because government sectors used to actually repay very, very fast without any intimation. That creates a problem for lender always, and the rate what they are expecting, we may not be able to actually satisfy them as of now. Our focus is on private sector, and 100% of the disbursement in this quarter have been done by in a private sector. In the future also, the major focus would be on private sector.
Got it, sir. And any timelines on this sanction number of 1,000 odd crores in Q1, and H1 number also looks very decent at around basically 1,200 crores. So what could be the timeline for this sanction to disbursement typically for PTC clients?
For PTC clients, we have not sanctioned any loan to any PTC client as of now. We are doing it in an independent and different other.
I mean your client, PTC India Financial.
Okay,
client.
This
by what time we can expect to disburse?
That will be sure in Q3, because we are already working on them, and they are lined up for disbursement. By December this year, we'll be able to disburse not only the shortfall of last quarter. We'll be disbursing few new cases also.
Got it, sir. So one the basic question I had with regards to the yields what we are showing at 11.5%, and banks ready to grab solar funding anywhere at 8 to 8.5. So going forward, what gives us the competitive edge in terms of disbursing loans, or typically AA and below clients, which would be our typical clients? So going forward, how to look at the opportunity in this AA and below or CNI segment for the solar segment lending, and how are we tackling the competition from banks also in this particular segment where the risk rewards are favorable for banks also?
See, what Balaji has already explained is, the infrastructure sector is quite a very large sector where the ticket size varies from some single-digit crores to 1,000, 10,000 crores. And we are a smaller player in comparison to the other infrastructure lending providers. So our focus is in the area where these lenders are hardly interested, because that is a very low ticket size area, and it requires a quite a big bit of ability to engineer the loan product. At the same time, the structure has to be done. So we are focusing on a structured finance more than a vanilla project finance, where the rate of interest are very low in the market. Our sector, what we are considering is restructured area, areas which are new in the market and like CBGs and ethanol products, that type of thing in solar and wind. We are actually doing some EPC funding also, working capital, small ticket size SME fundings. And our future planning would be in hospitals, educational institutions also. Even we'll go for some big brand hotels also. That is also in our planning. So the area what we are trying to grab is the area which are not being favored by very big lenders already present in the market, and we would be only able to get our margins what we aim for. At the same time, the credit quality or the asset quality also would be high. Since we have developed in last few years this appraisal capacity and structuring the loan, which can actually give a benefit to the lender as well as the developers also. We have got a set of our own borrowers also. We look at us because of our speed and our planning and our advisory services, which we actually provide them free of cost. So that will support us in getting our margin.
Got it, sir. That was very helpful. And one last question from my side on this provision number. So we are continue to see a lot of write-backs in the provision, and also the slippage number is declining on a YOY as well as QOQ basis. So going forward, in any formal guidance in terms of what kind of credit cost are we looking at? Because although the area in which you guys lend seems very exciting, but the AA and below category of borrowers makes things a little skeptical. So wanted to understand what kind of credit cost guidance are we giving from next 2 to 3 years perspective?
Long term, what we are envisaging is we want to look at a overall gross NPA of 3% and a net NPA of close to 1%. And coming specifically to the credit cost, we do not envisage it being more than some 60-70 basis points on an annualized basis going forward. So that's our entire intent, keeping it like that.
Got it, sir. Got it. It was very helpful. Probably I have few more questions. I'll join back the queue and come again later.
Thank you.
Thank you. The next question comes from the line of Akash Jain from Oryx India. Please go ahead.
Hello.
Yeah,
hello. Yeah. Sir, thank you for the opportunity and thank you for congratulations on the great results this quarter. Sir, my first question would be on the segmental NBFC lending that you guys are planning and have done 1 or 2 cases, which I heard from the management team. I just want to know what sort of team that you guys have put in and what is the risk-based pricing that you guys are doing for this particular segment. Because banks have been very conscious towards lending to this sector, but you guys have taken up, and I just want to know the rationale behind it.
Yeah, thanks. So basically what we are doing is, either though we have been a B2B financier, what we are saying is in the core areas, sometimes we'll get into B2B2C, and that's where this NBFC lending fits in. Some of the segments which we cannot reach out directly. Say, for example, we are funding solar power plants, but now rooftop solar is also solar, but we cannot do this. The ticket sizes are small. Therefore, if an NBFC is funding it, we'll be funding them indirectly. So what we have put robust risk management systems in place that this would not cross 6-7% of our portfolio even in the medium term. So that's one thing which we have put in place. And we got an industry expert who has got immense experience in lending to this in more than 10-15 years. Not only this, he's also got robust experience in lending to manufacturing entities in the SME space. So that's how we are building up a separate vertical. Our primary tenets for any business line, whether it be SME lending or whether it be in infra, whether it be roads or power or any of these things, it's based upon robust risk management, and the customers to whom we lend should be of a lower risk category so that our portfolios having low volatility with respect to the asset quality. We do not want to yo-yo between periods of high profitability and low profitability because of provisions. We want to create a sustained portfolio. And two, there's an internal framework wherein our pricing is based upon risk that therefore we ensure that each of these newer segments is margin accretive to the company as well as will generate more profits for the company.
Okay, so I hope you guys are not lending to triple B NBFCs or triple B MFIs, because MFIs is a sector which is very risky in this market.
MFI not a focus area. We will not lend to any MFIs because that's what I said, right? B2B to B2B2C. So we are not lending to an MFI. It's not a focus area for us. So we will not do that.
And what is the rating of the client that you guys just did?
No, that's this. I don't think we'll say that. Only thing I would like to, if you look at the last 10 or 15 years data, the industry-wise data of banks or other financial institutions lending to NBFCs, it has witnessed demonetization, it has witnessed GST, it has also even witnessed the global financial crisis in 2008-9, the microfinance crisis in 2011-12. Actually, the credit defaults in this space have been few and far in between. And even, for example, if you look at the 15-year track record, the credit rating upgrade to downgrades for NBFCs is far higher, 4 times, compared to for the manufacturing it's only 1.5 or 1.6 times. While there's a lot of perception what one needs to do this in a very judicious manner, and what we are doing is we'll do it in a way which is aligned to our core objective of delivering better infrastructure to the various stakeholders.
Okay. So what is the expected yield that you guys are expecting from this segment, NBFC segment?
Currently, we don't give any sub-segment-wise results. We only give a overall this. As and when we do that, we'll be disclosing it publicly.
Okay, sure. So my next question is on the rating bit, and the rating agency are continuously asking the management to borrow more so that they can have a much wider look at the company. So any chances in the last quarter, any bank interaction so that company has chance to borrow?
Dilip will take that.
So, as already I explained that our treasury team has been aggressively chasing up with all the existing lenders as well as the new lenders, and that has shown the result as well. And our two lenders have reduced the spread rate by 30 and 40 basis points, so that is a sign of improvement, and others are also taking up. In the meantime, we have been following up with we are negotiating the rate terms with the lenders, right? Getting the fund is not a difficulty for us. We are just negotiating the better terms so that we can improve our total cost of borrowing. So we are expecting that this should materialize very soon, right? We will be having the sufficient sanctions to us, because still we have a sufficient fund balance available in our system close to the more than 1,500 crores. So accordingly, we are negotiating with the lenders. Thank you.
So why don't you borrow first and then improve the rating and then further lower down the cost of borrowing in the future quarters? Because because rating agency wants you guys to borrow first.
So we are optimizing, right, both cost and return part, right? So whatever suggestions you are giving, so we will keep that also in the mind. Thank you.
Okay, sure. Thank you.
Thank you. We take the next question from the line of Shana Malu, who is an individual investor. Please go ahead.
Thank you for this opportunity, sir. My question is might be harsh, but it is practical. 3 quarters back only you said that this is the bottom line of loan book size. Since last 3 quarters you had been assuring of good loan book size, but not fulfilled. Previous quarter also you said we will achieve 1200 crore loan disbursement in second quarter itself and having target of 4000 crore for this financial year. But since last 4 quarters, you are giving only false assurance to the investors. After these independent directors' resignation, you will face major hurdle to raise fresh fund from different sources. What you will do now from next quarter, your PAT will come down, loan book size will deteriorate. Just come out from talkative nature to working nature. Don't give false assurance to investors. Otherwise, I will not attend the talkative con call from next quarter, sir.
Thank you.
Thank you. We take the next question from the line of Suyash Bhave from a Wealth Guardian. Please go ahead.
Yeah, thank you for the opportunity. Am I audible?
Yes, Suyash.
Yeah. Sir, regarding the disbursement guidance, is there any change in the guidance? In Q1 we had given a 4,000 crore guidance. And in H1 I think we have just crossed 450 crores. So are we sticking to the same guidance?
No, actually, because that's something which we are relooking at it. It's dependent on two things, because there's independent directors when they are quit is also would impact us in terms of fundraising, and also where disbursements have been below our plan. We had said 1,200 crores in the first half. We have disbursed only some 450 odd crores in the first half. So we are looking at close to around 3,000 crores for the full year. 2,500 to 3,000 crores is what we are doing, and that's what. And that could be a positive upside to it, but for the time being, we're seeing the full year will be 2,500 to 3,000.
Okay, sir. And regarding the loan book, do we have any year-end guidance for the AUM? What kind of target you are looking at? Okay.
Repayments and others, etc. Right? You can just recalculate, work it backwards.
Okay, sir. Understood. So my last question is regarding our gross stage 3. So we are at 193 crores for gross, and net it is 47 crore. If I get it right, I think the major is the Dano portfolio, the major part of this. What is its exposure in our books? What is the timeline, expected timeline for its resolution, and what kind of write back can we see? Any insight into that?
Dano is the only account which is in stage 3 now, and we are already working in 2-3 paths to resolve that, and we actually expect that this would be resolved, and more than something around 220 to 230 crore. We hope that will be written back in this area, this year itself. But the final numbers are still not clear because the exact plan has not yet been fulfilled. But we expect it would be more than 220 to 230 crore, which we would be able to write back from this account, and we will be able to resolve this account also, so that by end of this year or the first half of the next year, our net stage 3 would be close to 0.
Okay, sir. That's good to know, sir. Thank you. Thank you for thanks.
Thanks.
Thank you. We take the next question from the line of Dinesh Kotewade, who is an individual investor. Please go ahead.
Thank you. Thank you for the opportunity. I have 2 questions. One is the appointment of independent directors. Can it be done from PTC, REC or NTPC Green or any big company where they can help us into getting the AAA rating? And my second question is the disbursal to sanction ratio is very low as compared to the previous quarter. So please, can you elaborate on this? Thanks.
The independent director's appointment will not impact the credit rating, but from what I think you're hinting at is you want us to appoint good reputed eminent people as independent directors. We are proceeding on the same. If you look at the person we have already appointed, Mini IP, she was a former managing director of LIC, the largest insurance company in the country. The other independent directors who are coming on board would also be equally illustrious. So we'll be having a very eminent board. Not only they would be able to guide us on governance oversight, but they'll also be able to enhance the perception of the company and ensure that we are able to carry on our transformation going forward. And what was the second question?
Second question was your disbursement sanction ratio.
I'd
like to take it up. See, if you go in the infrastructure segment of financing, the sanction to disbursement ratio typically is even lesser than that, because an infrastructure project takes as long as 3 to 6, 7 years to construct. However, our disbursement to sanction ratio has been even better than industry, though our sanctions are very less. And since we are sanctioning in restructured finance more, and corporate and construction, corporate and this balance sheet funding are a big part of our sanction portfolio, we expect a sanction to disbursement ratio maybe something around 60 to 70% in coming quarters, which is far ahead of the industry average.
Thank you, and best of luck to the entire team. Thank you.
Thank you.
Thank you. The next question comes from the line of Mangesh Kulkarni from Almins Financial Services. Please go ahead. Mangesh, please unmute your line and proceed with your question.
Yeah, thank you for giving me an opportunity, sir. I just wanted to know about these, out of the 193 crores remaining in the gross stage 3, Danu, what is the amount of Danu outstanding?
See the outstanding in the books of Danu is principal outstanding is something around 281 crore. Interest is over and above that we don't book because of this account is NPA.
So 193 crores means...
Yeah, basically what happens is, since the project has been NPA for a long time, we have written off part of the loan principal. But while we have written it off, in the future we expect to get more or less what is there in the books, 193 crores, sometimes some 10-20 crores, or like what Sanjeev was saying, 220 or 230 crores, we plan to realize it. That's way we plan to realize it. It's an operating asset, and now we have taken steps to resolve it through NCLT or through some other means. The process is a bit time consuming. We cannot say, unlike in a retail asset, this will get resolved in 3 months or 6 months. But we are reasonably confident that by the first half of next year, we should be able to resolve it completely. And like what Sanjeev stated, once we resolve, our net NPA would be very close to 0 or 0.1%.
Got it, sir. And in terms of now again our revised disbursement target, are these realistic, or in next quarter again we are going to reduce? Because constantly we are not able to achieve the disbursement targets and all these things. Definitely these resignations of directors was the issue during the last quarter, but then what will be the realistic targets? And looking at your sanction pipelines and all these things, your earlier targets are also achievable. So where the issue is coming? That's the question.
Your question is a very fair question. Now, 2 things. One, what's happening is, if you look into it, like what Sanjeev had explained earlier, 100% of the disbursements was in the private sector, and the public state sector, the huge pressure on rates, and obviously we do not want to do business at low rates or low profits. Now, while in the quarter 2, while we disbursed 336 crores, or 326, how much? 326 crores, sorry. We disbursed 326 crores. What should be, it was entirely to private sector. If you compare what we have disbursed to the private sector in the entire last financial year, we have disbursed some 295 or 296 crores. So what we did in last year, we did it in 1 quarter. Now, 2, if you look at the sanctions in the second quarter, 1,048 crores which we sanctioned entirely to private sector, which is the highest in the last 10 quarters, there will be significant spillover. So we envisage disbursing close to 1,000 crores in this quarter. And Sanjeev had explained the reasons why the disbursements got postponed. I'm reiterating those reasons. This year the monsoons got extended significantly, and because of excess rain, the construction activity was impacted, and therefore the offtake from the customers towards availing of the disbursements got reduced. That's what we'll be catching up as far as this particular quarter is concerned.
Got it.
So when I say 2,500 to 3,000, it is there. What you need to look into it, the reason why there is such a lot of variance is coming, we're a small organization, and the actual number of cases which we are doing is small in number. Now, in the second quarter, we have sanctioned 1,048 crores on 8 or 9 projects. Going forward, as number of projects increases smaller size, the volatility will reduce. So, if we have to evaluate us in terms of our disbursements, instead of looking at a quarter by quarter, I would urge you to look at the last 4 quarter ka average or running average. That will make it less volatile and be more predictable indicator.
Got it, sir. Yeah. Thank you. Thank you very much.
Thank you. We take the next question from the line of Amesh Sheda from Banyan Capital. Please go ahead.
Yeah, thanks for the opportunity and congratulations on the resolution of NPAs. So my first question is, you were looking to raise 300 to 500 crores of capital. So any update on that?
We were on, let's first get the boards reconstituted. When we are moving on something, some other thing came up. So it's on track. What we would do is at this point of time, we are looking at a whole host of options. And we'll be taking it in the board. Once the board gets fully reconstituted, then subsequently we'll be taking it up to the board. And that is more for a confidence capital per se. And as it is now at this point of time, right, there's a lot of uncertainty. You also got a significantly extra cash, which will fund our disbursement for the next quarter or so. So therefore, we'll be going a bit slow. But we are dialoguing internally with the various stakeholders on what is the right approach towards raising this. But that is on track. Once the board is reconstituted fully, we'll be proceeding on that.
So you mentioned that, the other directors will be on board in the next few weeks. So do we expect the capital raise to be in this financial year?
See, I do not want to commit anything. The important thing is once the new board gets reconstituted, the new directors come on board, then after that it will be taken up. It could happen this year, in this financial year, most probably yes. That's what we are looking at. But it could also get spilled over. But our intent is to get it in this financial year.
Okay. And just one clarification. Did you mention that the resignation of these independent directors will impact our ability to raise funds from banks? Because we will be sorted for Q3, but then for Q4, we don't have enough liquidity to disburse.
See, when I said I was just being pragmatic, at the end of the day, the team has put in immense effort and yards, and there were a lot of things fructifying were in the pipeline. Now, this is an adverse news. There's more explaining to be done, and naturally, the decision-making process would tend to become longer. And this would become longer not only for this independent act of this resignation, but because of the historical past of this organization. Now, what I would like to bring to the notice of you and other participants is that post this, our rating was reviewed both by CRISIL and ICRA. Unlike last time, there has been no impact on our ratings. We've also engaged proactively with the regulators, and the regulators are satisfied. So this is an unfortunate event which should not have happened, but has happened. So it will push together the fresh fundraising abilities by a couple of months, And that was the reason one was saying this will impact it, because again you have to go back to the drawing board, you have to start at first base and start pitching ourselves to the various stakeholders in the different institutions to get money.
Got it. Thank you so much and all the best.
Thank you. We take the next question from the line of Vishal Biraya from Bandhan AMC. Please go ahead.
Hi. Congratulations on a good set of numbers. So we seem to be ripe for a rating upgrade. So is there anything that is holding it back, and by you to make a
growing book and
no,
sorry,
we seem to be ripe for a rating upgrade, and what is holding it back in terms of, is there anything specific that the rating agencies are looking for which is holding it back? And by, I know it's difficult for you to comment but on the timelines, but if you want to take a guess as to how soon should we see a rating upgrade, then what would that be? Thank you.
The rating upgrade would happen once we get couple of fresh credit lines from financial institutions, banks or other institutions, one, and two, our book starts growing. So realistically, I think if one wants to be very pragmatic, once if our book crosses 5,500 crores and we get couple of sanctions, fresh credit lines from the banks, we'll be getting a credit rating upgrade.
Okay.
So
then that shouldn't be very far.
Timeline, more or less, towards once our annual results are over, it should happen. If it happens, anything happens prior to the annual results would be a bonus.
Perfect. All right. Thank you. That is next to you. Thank you.
Thank you. Ladies and gentlemen, as there are no further questions, I would now hand the conference over to Mr. R. Balaji, MD and CEO, for his closing comments.
Thank you all. Thanks for your patience and participating on this call. I know that if you look at Q2, while there have been significant positives in terms of resolution of legacy assets, improving financial controls, venturing into new area, focus on private sector, the one area which is possibly the key area is that our disbursements have been significantly below what we had suggested, because we had said around 1,200 crores for the first half, in which case the second quarter alone would have been 800 to 1,000 crores. Sanjeev gave given some explanations. But since we got a robust pipeline, we could say that we'll be able to make up for it in the third quarter. And going forward, we expect to maintain the business momentum of the new business that is getting generated while maintaining the good portfolio quality, so that we do not get back into the same issues that we were confronted with a couple of years back. Thank you. Looking forward to engaging with you in the future. Thank you.
Thank you. On behalf of PTC India Financial Services Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.